Welcome to the Streetwise Property Pulse, your weekly resource for Ontario's real estate investing and financing updates, where we provide you with timely updates and perspectives from leading real estate practitioners, answer your burning questions, and share with you valuable tips and strategies. This is Dalia Barsoum from Streetwise Mortgages. Today we are continuing with our multi-week series of looking at the various investment strategies within the current market environment and what you need to know if you were to deploy any of these strategies, including the buy and hold refinance, rent to own, flipping properties, student rentals, as well as assignments. Today we're speaking with Gillian Irving. She is the CEO of investinstudentrentals.com. Gillian, welcome. Gillian, tell us about yourself and how you work with investors.
Thanks so much for having me today, Dalia. So in terms of what we do, we specialize in student rental investments, which tend to appeal to those mortgage-ready investors who are seeking above-average rental income and cash flows without having to undertake costly and risky renovations like some of the other real estate investing strategies, like duplexing, for example. But most importantly, I would say our goal is to make investing with us 100% passive for our investors who tend to be time-crunched business owners or professionals who just do not have the time for the day-to-day nuances of dealing with real estate investments, but still want asset diversification into the space.
What opportunities and challenges has the pandemic presented for investors investing in the student rental strategy?
In terms of the opportunities right now, I would say they're not really just limited to student rentals. In general, they apply to the industry as a whole. Of course, right now we have these incredibly low interest rates, which benefit all investors equally. Having these low interest rates obviously translates immediately into more cash in your pocket at the end of every month, which is really good for everyone and applies to the student rental strategy just like everyone else. But I would say that while there's an opportunity given these low interest rate environments, it's also a bit of a double-edged sword, of course, because with these low interest rates, it often drives more buyers to the market. So getting those houses often becomes a little bit trickier in times like this. So what you're trading off for in terms of low carrying costs, you might be paying a little bit more for these houses. So there's a little bit of opportunity and challenge with these low interest rates.
Gillian, what are the risks associated with investing in a student rental strategy given the current market conditions, and what do you suggest for investors to manage these risks?
In terms of overall risk in the student rental strategy, given the current COVID-19 crisis, I would say there have been a lot of questions by tenants and by landlords about what campus life would even look like come September 2020. Of course, we've been hearing through the summer that many university and college campuses have been announcing either classes fully online or a hybrid model. And students who move away from home to go to campus are wondering whether they should even return to their college houses if classes are going to be online. So there have been lots of questions regarding rent payments and honoring lease obligations, especially if they don't feel like they need to go back to campus. So in terms of managing like these legitimate concerns by students and landlords about whether or not they are going to get their rental payments every month, I found that the best way to mitigate that risk has actually just been with kind, compassionate, but kind of firm coaching with my student tenants. Through the summer, I had to guide them frequently to government resources, which would help them cover their rent in the summer. I educated them about how to sublet their rooms and how to do that effectively. But at the end of the day, it was a bit of a lesson in honoring their obligations because, of course, they cannot be excluded from their rental payments, just like I can't be excluded from my financial obligations. So I found that really, again, mitigating that risk has really all been about a question of educating them ways to manage through their rental payments without defaulting in any way.
How do you anticipate the student rental strategy to perform going forward given the economic outlook?
In terms of how I anticipate the future of the strategy going, I actually feel completely confident in this strategy because I have history to look to in order to predict the future. During the last economic recession, the numbers were quite staggering, actually. Students went back to school in droves because there weren't as many jobs as they were hoping. So many went back to university or college to upgrade their certifications in order to be more qualified for the job market. So if history is any lesson, I would say that we can expect enrollment in universities and colleges to go up again in the next few years as we face sort of economic challenges, which means more demand for our properties. So I'm feeling really confident going forward that we will have ample students to rent our properties, and that all the hiccups and questions that initially came about lease obligations will be fully understood and answered for them by that stage. So I've got a bright future ahead and looking forward to investing going forward.
Thank you very much, Gillian, for being with us today. On the financing front, I would like to share with you several tips that will help you with the financing of your student rental property. Tip number one is to keep a master lease agreement instead of keeping 6 or 7 room rental agreements. Tip number two, if you are buying a student rental property, it is always easier from a financing standpoint to finance it if you are taking vacant possession or if you're buying a rental that is not already rented by room versus inheriting the students. Tip number three, most of the 5 big banks currently do not finance student rentals. However, there are other options for financing them, including working with alternative lenders as well as some credit unions. The financing is generally anywhere from 65 to 75%. That's it for today, guys. To get notified of our new episodes, please subscribe and hit the bell button. I'll see you on the next episode.